talking about responsible investing. It is important to get a nice financial return when investing, but even more important to think carefully and thoughtfully about where we are investing. This next conversation considers investments from a social impact and an environmental perspective, and I am thrilled to welcome to the stage María del Val, partner at Attalea Partners, who's going to facilitate this conversation. Thank you, María. The stage is yours.
Thank you very much. So we are here today to talk about responsible investing. Responsible investing is accelerating into the mainstream. And how do we see this? Well, in the past 9 months in Spain, almost 50% of venture capital firms have actually signed up to the United Nations Principles for Responsible Investing. Probably you've also seen in the news that responsible investing is now more important than ever. Now, what are the concepts behind responsible investing? And if you're an investor or an entrepreneur that are intrigued or maybe actually want to purposely take a peek or take a look into positive social and environmental impact, what are the concepts you should understand? And that's what we're going to explain here today. Now, 2 key concepts I would really like you to understand clearly, which are very different. ESG. ESG is about processes. It is about how you embed environmental, social, and governance factors within your investment process, and also within your company's strategy. This generates value, but also preserves value. And let me give you an example. For example, cybersecurity is really important for tech firms. For social factors, you will have for fintech, for example, consumer protection. And finally, environmental factors are really important for agri-tech or medtech. Now, we have here today 3 panelists that are going to help us understand the concept and the difference with impact investing. Impact investing is about purpose. It is a dedicated investment strategy, and many think that it will actually become a different asset class. As you see, these are 2 different concepts because impact investing seeks positive returns together with a positive environmental or social impact. Both of them actually contribute to a better world. We have here today with us the pleasure of having Cyril Gouiffès, who is the head of social impact at the European Investment Fund. The IF, as you all know, is the most important institutional investor in Europe and has reshaped the world of how investing is done because of its strong commitment to impact investing. Now, Cyril, in your view, what is the difference between ESG and impact investing, and what correlation do you find between impact and investment returns when talking about responsible investing?
Thank you for the very kind introduction, Maria. That's a nice way to be introduced, obviously. So I'm glad to join the panel today on such important matters and strategic matters indeed, but also matters that need to be addressed carefully because these are trendy topics. So obviously this involves a whole positive consequences, being active on a segment that is gaining traction also in the public, but also requires to be very cautious around defining what we mean by impact investing and defining what is, let's say, a relevant, sound impact investing strategy. So to your question, in my view, ESG is very much about reporting and transparency, meaning that with ESG standards and by complying with globally acknowledged or globally recognized standards such as the PRIs that you referred to earlier in your introduction, are crucial to make sure or to provide transparency in the investment industry, meaning that next to financial metrics, investors are now also expected to display and show their non-financial metrics. and by non-financial metrics, often referring to the externalities linked to a business activity. And obviously, the negative externalities that sometimes can be generated by any economic, any social activity, actually. So that's, in my view, ESG, like an increased effort on standardizing transparency with globally recognized standards, while on the other hand, impact investing differs from ESG because impact investing very much has at its core the intentionality. So with impact investing, the positive that emerge from the investment one performs is not an externality, but rather when setting up an impact business, an entrepreneur, next to the will to be successful from an entrepreneurial point of view, also has a clear will to address and solve social or environmental issues. So the intentionality, in my view, is key to differentiate ESG on the one hand, that is about transparency in all the externalities that an economic activity generates, and impact investing on the other, where impact investing is actually presented and has the ambition to solve through entrepreneurial solution, social and environmental issues.
Thank you so much, Cyril. That was a really good explanation. And we also have the honor today to have Antonio Giménez de Córdoba, who is a partner at Seaya Ventures. Seaya was one of the first players in the venture capital arena to sign up to the UN PRI. Antonio, the question for you is, what drove Seaya to actually sign up to the PRI? What changed in the organization? What changed actually in your investment processes, and what challenges did you find in the way?
Well, thank you. Thank you for having me in this very interesting panel and for giving the importance of the ESG perspective to the investment criteria. So first, a bit of background about Seaya. We're not impact investors, but we have taken into account all the ESG, all the impact of our investments in our criteria. So we invest with this purpose, and we only invest in companies that have a positive impact into society. So having that strategy in mind, we have always had ESG in a way of investments. So we look for a framework, so that's just to make more structure what we were doing in an informal way. So that's why we find PRI as the ideal framework, which we have been following for the last years. So in essence, there were no changes in our investment strategy and almost no changes in our investment processes. It was the changes that we had to follow was more reporting and giving more structure and giving more objectivity to what we were doing in an informal way. Well, on the other hand, we had some positive effects because we're now thinking and approaching our new investments with these new eyes, and it gives us a more structured way to implement those investments. And you were mentioning the challenges that we have faced in implementing the PRI was mainly having access to the data, because having access to the data from the companies, which is a new set of data that they're not used to report to investors. But they were, when we explained what was the purpose for that kind of investments, that they were happy, and it was just a first for the first months that problem. So no major challenges on that sense.
Thank you so much, Antonio. That was a really useful audience to our answer for our audience. And we have finally here with us José Moncada, who is the managing partner of Bolsa Social. Thank you so much, José, for being with us today. You invest as an impact investor in projects and startups that actually pursue intentionally a positive impact, either environmental or social. Now, in your view, why is impact investing so important in the current environment? And also, given the audience, we have many entrepreneurs today, startuppers. What hints, what tip would you give to them if they were to pitch to you their project? And what is the correlation you actually seek between impact and financial returns?
Well, thank you very much. It's a pleasure to be here with you. Thank you very much, Maria. So, why is important impact investing? Well, as mentioned, because we are facing so big challenges as a society. They were very well framed in the 17 SDGs of United Nations, but maybe we can focus in two. First of all, we have an economic model that it's demonstrated that it's not sustainable. It's no longer sustainable. So we need to look for an economy that is sustainable. And second, we see the rise of inequality. The gap between the poor and the rich is growing, and this has exacerbated with the pandemic. So we have a responsibility. So we have to we have to become aware of our responsibility as investors, and we need to think, what kind of society do we want to finance? And clearly, we need to change, and that's impact investing. Impact investing is considering going beyond the ESG, is adding to the traditional risk and return analysis the element of impact. So it's basically putting your money as an investor to finance change, to finance the transformation that we need as a society to become more sustainable and fairer. And that's why impact investing is about intentionality, about mission. You put a mission to your money. That's why, as answering to your question of what do we ask as a fund, Bolsa Social just recently launched a fund with AFI, and we are funding startups, early stage startups in the very initial stages of development, because there is where is innovation and disruption. And we're asking them, first, the entrepreneurs be mission driven. Second, to have a good business model, already demonstrated with some market validation. And then third, big ambition to grow, so that invest, grow in value, but also can grow in impact.
Thank you. It was really inspiring, and I really hope this panel on responsible investing was interesting to you all. Thank you very much.